Hey guys, welcome to today's video. My name is John and I'm going to be a trader for today. In today's video, we're going to cover American stock market, Bitcoin price action, and Arbitrum price action. Let's start with the stock market. As in the last video, if you recall, I was extremely bullish on the American stock market because literally there's only more fuel for the bulls. It started here, like when I started my updates on S&P. So we started it until we started the channel, or since. At this spot, if you recall, one of the first videos from me was talking about this crucial level that I have denotated here. It's also a major Fibonacci level, but I prefer fundamentals. But basically, this is such a strong support. It's the difference between the bull market and bear market for the large hedge funds. They usually gauge it as that. I wanna show you a moving average exponential, and we're gonna set it at 21. So you'll see what I am tracking sort of on the technical level. So on the daily, as this works especially great on Nasdaq, but extremely easy trick to do on these large indexes is just to watch for this EMA. 21 weekly is pretty strong. We're just about this. There's from the technical point of view, we sort of broke this huge downtrend. This is some, oh my god, this is so nice price action. Like, look at how aligned everything here is, like stairs. Yeah, I'm pretty bullish now. I think too many people are bearish at this point. On the stock market, I'm bullish. Yeah. Sort of what I wanted to say with this EMA is that, like, trading just based off of it might work pretty well. I think that it's going to act as a pretty strong support or a gauge of the bias for the next couple of weeks, and I'm bullish now from the technical standpoint and from the fundamental as well. Then we have Bitcoin here. Oh, this seems to work fine as well, but let's turn off the EMAs. On Bitcoin is going to be more fundamental today. So just from the technical standpoint, there was some strong support here. Yeah, we broke it to the upside, but let's look at the more short-term price action. So I'm going to pull up some technicals, hopefully. All right. If you recall, at this point, I even denotated here. At this point, this was when my last update came out, and I was telling you guys that I'm bearish, but I'm not bearish at this point. I was bullish at that point. Sort of from the long term, I'm a bit more bearish on this. But what I was telling you, and this is what I was showing you in the last video, was this point, sort of. I was telling you about this 18% uptrend. I was telling you that it's likely that we're going to reach these levels, and look what happened. Look what happened since that. Like, brutal uptrend. Yeah, my calls are pretty great, guys. But now I think that we might take this level, and once we capture this level, I'm switching bearish. I'm switching bearish, at least for the short term. If you look at this, there are some huge order walls. There are some huge limit walls right here. If you want to break these limit walls, what you have to have in order to do so? I have aggregated open interest. Let's look what these exchanges are. Okay, I have only relevant volumes here. So I always set my indicators only to cover the major exchanges, because like Bitfinex and stuff like that, it can only mess up the data. But what I am talking about is you have to have a damn it. I hope this will load. But what I want to tell you is that you have to have a gauge in these sort of extreme like order book situations, what's going on with the open interest. All right, if there's enough fuel. So let's track down this trend. What happened? All right. This is such a long-term like view that it might be even irrelevant to like look at these time frames. But okay. So what's happening? So what's happening? So what's happening is that when you see these much of positions, this is perfect, guys. Like, listen up. This is, no one's gonna teach you this. This is some crucial knowledge stuff. I'm going to explain how these uptrends work. All right, this cycle, so to speak. Here's the thing. All right, it goes like this. If we look at this, for example, and now listen up carefully, like if you're watching this, you're lucky. That's how OP this is. So how uptrends work is that you sort of get this price action. If I would pull up the volume there, you would see that there's some major volume. But how the trends okay, so this was Black Swan even, but it doesn't matter. Let's see if I can pull up anything better. Okay, let's work with that. Let's say that it was a natural price action. I think it was, like, to some degree. Maybe, okay, so what I want to talk about. If you have an uptrend like this, watch carefully the aggregated open interest. And the story goes like this. If there's not much things happening, usually, so ranging or something like that, price action, if there's so much fuel to the fire, like, look at that, man. Open interest increased by what, 261 million? That's pretty nice. Just throughout this range, you know. Here it started like going up massively and nothing was happening. Like the price went up 6%. Look at that increase, guys. Look at that increase. So what happened was there are so many trapped positions, both longs and both shorts. Okay. So what has to happen? Well, for the market maker, at this point, it's probably easier when you see this so fucking powerful combo. Okay, watch this. There's this order book, alright? And there's this open interest. This is a killer setup, okay? So there's this order book. What this is telling us that there's more bid walls than ask walls. So it's easier to move the price to the upside rather than the downside. And there are so many trap positions. So what will happen? Well, the market maker has to damage as many people as possible. And he has to do it like, the more easy it is, the better it is. So he pushes the price to the upside. Like, by how much? This wasn't even a Black Swan event, looking at it now. Maybe it was. I don't know. I'm not familiar with the time scale right now, but let's sort of cover it from the fundamental view. So it was easier for the market maker to move the price to the upside with those many positions trapped. And on Bitcoin, 40% uptrend occurred. Now what happened? Well, we were trapping positions as well. We were trapping both longs and both shorts, right? Until it got to a point somewhere here. Let's consider this point, what I'm talking about, like this point right here. So what happened? This is a really shitty range. Okay, so what happened was that we got to a point, probably around here, where enough of, if I pull up liquidations, that's also a pretty useful indicator. Liquidations, aggregated liquidations. Let's see if that loads. But we got to a point. This is so obvious, but not many people understand it. We got to a point where so many shorts were liquidated, so many shorts were damaged, and positions are still trapped. Now the order book flips. Okay, the order book flipped. Now it's easier for the market maker to push the price to the downside. There are trapped positions. What are those trapped positions? Well, they are longs, and those longs throughout the uptrend, they didn't have to close those positions because they were profiting, and shorts have to buy back those positions because they were getting liquidated. All right, so now we damaged as many shorts as possible. Well, a 40% uptrend will fucking damage you. Let me tell you that. So we damaged a lot of shorts, but we didn't damage those longs that are still in those positions. It's easier for the price to go down. So what happened? From this point, we had a hard time going up, like real hard time. And it ended up with a probably more than something like 20% downtrend. Alright, 23% downtrend. And then what happened? The same story over and over and over again. It's easier for the market maker to move the price to the upside. There are still trap positions, so we move to the upside. Now here at this point, okay, we're here. We're getting to the important part. Okay, we're here. It's all about liquidity and where's most liquidity for the market maker. We're here. So yeah, this was obvious, like to this point, alright? So we're currently in this range. So this is obvious because the price was easy to move to the upside, you know, there were a lot of trap positions, blah blah blah. So what happened here? Oh, you'll say no. Well, this doesn't align up with your thesis, right? There's are trap positions, those shorts were liquidated, so now we can go down, right? Well, if this would be the case, then the market would only look like this in most cases, right? It would be sort of the... So you have to have some pattern intuition or just intuition in general, know what's happening. But that doesn't mean that this uptrend was a bullshit, so to speak. I'm going to pull up this. And this is where you get to a point where you have to add more confluences. At every range, the retail sentiment was getting bullisher, if that is a word. It was getting bullisher, but so maybe price to the downside. Like from all of these indicators, you cannot really tell. But if I pull up this, so the first thing, you can see extremely low liquidity here on volatility. On extremely low volatility like this one, you cannot be bearish. It's hard for the price to move to the downside. So this is where you have to look at the technicals. But most importantly, I was showing you this. I don't know if this slows, but there was a major liquidation level here, and there were no liquidations levels to the downside, right? So that was also telling me that something like this can happen. And also, like yeah, we just liquidated those charts. Like this point was so powerful. Yeah, here it is. You can see that there are no liquidations to the downside. There's slow volatility. You know, you have to use a bit more confluences. And now we killed all of those guys. So at this point, we're getting to the important part. At this point, I'm bearish. All right. At this point, I'm bearish. Why am I bearish? Well, we tripped more positions. Oh, that's sort of good. Like this is kind of a strong level. Like, but to be honest, I think that we just liquidated those many longs right here, and now it's hard for the market maker to move the price to the upside. I know that S&P is bullish, but I think that Bitcoin will cool down a bit, at least to this level. All right, so once we reach this level, I'm switching to short and shorting here. Okay, I'm looking for a 6% trade. Nothing extreme. It's not really obvious at this point, but I feel that it's hard to move the price even higher. We liquidated these guys. Longs are safe, so I think we can. I'm pretty confident that the price at this point, or somewhere at this box 31k. Yeah, price is probably going to reverse. Okay, that was my in-depth analysis of Bitcoin. Hope you learned something new, and that analysis is really powerful. Like as you saw, it's really powerful. You have to have more confluences and sort of understand the indicators that you're looking at, which is something that's pretty hard to obtain. That sort of knowledge. But yeah, you have me. Okay, so Arbitrum. All right, I was giving you a lot of updates on Arbitrum. I was quite bullish. My bullishness paid off because we had 18%, which is not bad. Like ENJ was better, but what's happening here? Well, nothing's really clear. All of the volume deltas, like the price driven market orders are mostly from, I don't know, it's the same. It's just weird that there's such divergence between this. I guess the open interest is just fueling up the price. But on Arbitrum, at this point, I would sell it. Like, I would sell it. I don't know why my drawings are invisible. They're fucking invisible. Okay, here we go. At this point, I would probably sell it, and it lines up with my Bitcoin thesis. So if you would take that trade that I was updating you last time, like if it works out, it'll make 24%. At this point, you may be up, I don't know, 15% if you're lucky, 18 if you're super lucky. But yeah, I think that at this point it can probably revert. You have to take Bitcoin into an account. Like the long short ratio is really bearish, but it's reaching up the extremes that I think that's sort of the reverting point instead of I know I have a long history with those indicators, but sort of to speak, I think that this is, after reaching this level, I would sell it. Yeah, there's some strong support here, or resistance. These volume deltas are weird, but I think it's mainly driven by stable coins, which is bad. You can see this sort of freaking divergence here. Spot more active, not spot less active, not great for sustainable uptrend. So anyways, today I gave you a very powerful technique to analyze Bitcoin. As you saw, it works really well. Then we covered the American stock market, sort of what's happening, that I think nothing is really bearish. Macro would be a longer video, but maybe we can cover that as well sometimes. So then we covered that Arbitrum. If you still hold that trade, if someone opened that congrats, and I would be closing up soon. And yeah, if you learned anything new today, please like and subscribe. It's free and you can always change your mind. And remember that trading is risky, and I'm not a financial advisor, so trade only when you're experienced. Alright, so thank you for watching, guys, and until the next video, bye bye.